Hello, traders. Gary Wagner here. It is 11:28 in Honolulu and 5:28 in New York on Wednesday, 30th day of March, 2022, and this is the daily report for gold and silver. A very respectable recovery in gold today, with the April contract gaining $20.60, 1.08%, and is currently fixed at $1,932.80. What is most interesting, and I think shows strength of gold, is yesterday's low, which came in at around $1,886, and is also a 61.8% Fibonacci retracement from the beginning of this leg of the rally up to the top at 2,078. The 61.8% retracement level represents a deep but acceptable correction. It can go to 78%, but we consider a deep correction to be 61.8%. April gold is quickly coming to first notice day, which means the next front month or active month will be the June contract, symbol is GCM22, which is currently up $19.40 a percent and fixed at $1,937.40. Because of the way we found support at the 61.8% retracement level, and we had a higher high and a higher low, I am looking to position ourselves from the long side. I am hoping that we get some kind of dip over the next 24 hours so we can have a good risk-reward ratio. Of course, we will send out a special trade alert to that effect via email as well as SMS text message. Dollar weakness absolutely played an important role in today's gain in gold, considering that gold gained about 1% and the dollar index declined by just over 0.5%. We can say that half of today's gains can be directly attributed to dollar weakness, with the other half directly attributable to traders bidding the precious metal higher. Silver also had gains of just over 1%, 29-cent gain, taking it back over $25 an ounce, with silver futures currently fixed at $25.03. Traders, I began my career as a commodity broker, a CTA, a system developer, and then an analyst over the last 40 years. I've seen gold run on a few occasions, and the run that we witnessed over the last month and a half, meaning a $300 rally, is absolutely a dynamic move to the upside. Typically, if we see a rally go $100, we consider that to be a adequate rally and a average rally. $150, a strong rally. $200, a very strong rally. But it is very rare, except for two other occasions where we saw this kind of movement. And that makes sense because the unique fundamentals at play right now really support the fact that gold should move higher. First and foremost is inflationary pressures. We are getting a forecast from the Federal Reserve Bank of Cleveland indicating that inflationary levels over 2021 compared to the first quarter of 2022 is over 9%. In our opening letter, I state all of the particulars, but I also put in a very, very short graph for the last time we saw inflation levels approach double digits. That occurred in 1979, 80, and 81. And that was the time we had the highest level of inflations since the Great Depression, 1917. At that time, we were looking at 15 or 16% levels of inflation. However, in 79, 80, and 81, we went as high as 13%, and we had 1 year, I believe, inflation levels of 9%, definitely something that is unusual. It has only occurred a couple of times in history, stopped the spiraling level of inflation, but more alarming is the fact that they have very little control over many of the components that are causing inflationary pressures to spiral higher. And that is because they can raise rates. And when they raise rates, it contracts the economy and it slows the demands of goods and services. However, when food and energy costs are at the levels they are really necessities of life. So you are not going to curtail the demand of eating, and you still have to drive your cars and run machines and transport goods. And so those rises of inflation in energy costs and food costs are very, very hard to have an effect on having demand diminish. And it is for that reason that the Federal Reserve is really in a difficult position, because they cannot control the levels of inflation. And because of that, I think that they are stuck not only between a rock and a hard place, but they're stuck between a rock and a rock. And those two rocks are coming closer and closer together. It's going to be more than a balancing act to pull this off, meaning have a soft landing without creating a tremendous recession, which I believe absolutely has a high probability as an outcome to the current crisis we are facing. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.